Retirement will look different for Gen X. Economic uncertainty, inflation, declining pension plans, and Social Security facing a shrinking trust fund. It's redefining the retirement experience. According to the Bureau of Labor Statistics, the average retiree in the U.S. needs $4,350 to cover monthly expenses. With Social Security payments averaging $1,830, there's a sizable gap between those two that Gen X is going to need to fund themselves, and many aren't prepared. A report out this morning from Prudential shows 67% of Gen Xers have no retirement strategy, and 19% of those folks are not saving at all. Rob Falzon is the vice chair of Prudential Financial. He joined us now with an exclusive check of Gen X's retirement plans. This hits home for me, Rob. I'm in that cohort. I'm a Gen Xer. And these are pretty sobering statistics. And there is still time for people within Gen X to catch up during their working years, but not a heck of a lot. What stood out to you from these findings?
Well, the first thing that stood out is this is the tip of the spear in terms of this is the first generation where the significant majority of the generation is heading into retirement without a defined benefits plan. Instead, they've switched over to a defined contribution plan. As a society, we haven't done a very good job at educating these individuals on what level of assets and composition of assets are going to be required in order to generate a sustainable income through retirement. And so there's a disconnect there, a lack of education, a lack of understanding, and a significantly undersaved population heading into retirement.
And so for a lot of Gen X as well, that has seen the market turn multiple times at this point for the savings that they've put into their retirement that are pegged to the stock market. How do you go about even starting to advise on where they could potentially make sure that they are better positioned regardless of what the equity markets and savings there may do?
Yeah, so that gets into having a retirement strategy. Core to a retirement strategy is what level of assets and composition, Brad, to your point, do you need at different points in your life? So those, the earlier end, Julie, the earlier end of the Gen X still has time to accumulate savings. And so if you think about equity returns over longer periods of time, probably very appropriate to be more skewed toward getting equities and seeing the returns associated with those. As you're getting near to retirement, obviously de-risking of that portfolio in order to ensure that a downdraft in the market doesn't put your retirement security at risk. And then there are solutions around, guaranteed income associated with pools of assets like annuitization and otherwise that individuals can undertake in order to take that market risk out of their own plans and lay it off to a financial provider.
Rob, I also want to talk a little bit more about that gap between what people are going to get from Social Security and what they need to live. Because also in the survey, you found 58% expect to rely on Social Security as their primary source of income. But by the time Gen Xers get to prime retirement age, which will be around, 2033, Social Security isn't going to be paying out 100% of benefits, right? It's estimated it could be something like 77% of benefits. So how do people deal with that uncertainty and filling that gap?
Well, the gap is large. So if you look at Julie, the statistics that you put up, the $2,500 per month gap between average expenses and today's typical Social Security payout on average, that translates into a level of savings. To replace that gap, to fill that gap, would require a level of savings that's, depending on mortality and returns and all sorts of things, it's going to be $300,000-$400,000 that someone would have in order to be able to fill that gap. And a third of Gen X has got $10,000 or less saved. So there's a big delta there, and I think a number of levers individuals would have to pull as a part of that retirement strategy. One is increasing savings today, so a change in lifestyle today in order to be able to preserve a lifestyle post-retirement. And then also a reset of expectations as to the level of spending and lifestyle that you're going to have in retirement. One of the other things that the survey came out with that I thought was quite interesting was the more than half the surveyed population expects to extend their retirement. date, and 10% expect never to be able to retire. 40% expect to be working part-time after retirement. I don't know if that qualifies as retirement if you're still working part-time post that date, but those are the sorts of actions that I think individuals are going to have to be contemplating.
I mean, even I plan on picking up a little part-time job at a golf course somewhere. I mean, start a ranger. It's not a
Don't
bad
ask
job.
me about the golf, Brad. I do not have a view.
That's cool. That's cool. We'll stay away from it today. But while we've got you, Rob, I mean, even as we think about some of the roles and how the employment situation is changing, how people are being compensated, and where that skills gap is, what are the biggest considerations as people are preparing for retirement and the reality of the labor market demand for some of those highest paying jobs?
Yeah, so it's an interesting intersection of, individuals are indicating they need to work longer in order to be able to get to sort of a level of retirement savings. Yet over half the surveyed population indicated, some job insecurity, concern about the security of their job. Number one on that was the economy, economic outlook, and what that might do to their job security. But behind that were things around being replaced by other workers, younger workers, cheaper workers, et cetera. When you dig below that, Brad, what I think that's saying is they're concerned about technology and skills that are required in what the work of future is going to look like. And so as individuals are thinking about extending their work life, they're going to need to think about how they invest in and upskilling in order to remain relevant to the workplace. And today we have a gap. There's a reason there's a gap between positions that are open and positions that are filled. Much of that has to do with the reality that the skills needed for many of the positions as the economy is advancing with AI and other technology advancements, the skills are not there in the marketplace. And so there's this high demand for a certain skill level that doesn't exist. Individuals are going to have to figure out how they train themselves in order to position themselves to fill those jobs, or at least have the skills that are going to be required to maintain their jobs as they look to extend that retirement date.
Well, all of this is hopefully an important wake-up call for people, but we'll see what happens. Rob Falzon, it's always great to speak with you. Thanks for spending some time with us this morning. Prudential Financial Vice Chair. Thanks.